to another video. So today we're going to speak about some characteristics of what you require in order to be a successful trader in the long term. If you're new to the channel, a sub would be appreciated as I do provide valuable content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know in the comments below exactly what it is that you would like for me to cover in my next video. So today we're going to speak about something different because it's Friday, it's hot here in Cape Town as well. So when you start off as a new trader, the first thing that you want to make sure you do is make sure that you've got a trading plan. Now the trading plan will consist of your motivation, the amount of time that you can spend towards trading the stock market, understand what your goals are, choose a correct risk to reward. So I always say that a 1 to 3 is the best, and then a 1 to 2 is also good because you're risking 1% to make 3%, and here you're risking 1% to make 2%. And if you don't know, this is a risk reward tool in the market over here. So this is what a 1 to 3 would look like. Just the 3 there. That means that we are risking 1% to make 3% over there. And then next thing you need to do is assess the capital that you have to risk. And when I talk about capital that you can risk, I'm not talking about your salary. That's basically what you have after, the money that you spend on alcohol that doesn't get you anywhere, or that expensive shoes that you like to buy. Those are the money that you can afford to lose. Okay, that I'm talking about that money. I'm not talking about grocery money or stuff like that. I'm talking about that money that you just like, where you just entertain people, that just so that you can feel the same way that you did last weekend, and it's not going to make a difference to your life. That money. To understand how much money you have to risk, and the next thing is to understand how the markets actually move, and that would be a rule-based strategy. And then next thing is you need to keep a diary. So make sure that you diarize the trades that you take to understand where you've gone wrong and where you might be able to correct yourself. Now, the reason why I want to talk about the risk reward here as well, because if someone had to come to me and say, you know what, I've got $1, if I heads or tails, if you guess correctly, I'll give you this $1, or if not, you need to give me $1. I would probably say, no, I'm not interested in this. But if you had to come to me and say, you know what, you guess heads or tails, if you guess right, I'll give you $2, but if you guess wrong, I'll give you $1, then I'll say it's probably worth the risk because I will be able to double my capital in that case. So you always want to make sure that your reward is higher than your risk when you do open up a position in the trading market. Now, that is if you're new to trading, that's what you need. Now, there's a couple of things I want to speak about. The first thing is greed. Now, for those of you that don't know what greed is, you can greed, excuse me, that is the word greed. Now, when it comes to the foreign exchange market, greed is one of the most important things, or the biggest thing in the market that that will make you and break you. Because why? It's our there's a saying that goes that it is our desire to want to become rich so quickly, and that will make us lose money all the time. And this is exactly why. It's because people are greedy and they want to squeeze every little bit out of the market. Then what happens is the market punishes them, and you literally either lose all your money in one go. um, Sorry, you either lose all your money in one go, or you just say forex trading or trading in general just doesn't work for me as well. So greed is one of the biggest problems that you can find when it comes to trading. Now, I'm not going to say don't be greedy, because it's not easy to not be greedy, but one thing that you need to work on is to understand what the reason is for your greed. Hoekom is jy so uitgevriet to make a lot of money? That's one thing that you need to understand, because if you don't understand the why you are greedy, you could be greedy because, I don't know, you've made a loan and you need to pay back the money before the time, or you just love money because you like to entertain people that you don't know with money that you don't have, to impress people that you don't know. So maybe that's you as well. Now, discipline is one of the most important things when it comes to trading as well. Now, why is it important to stay disciplined? Because why? There's two things that you don't want to do. You don't want to chase the market up and down. If you've got a set of rules that you follow, make sure that if the market does not provide you with an opportunity, don't go out there and force a trade that doesn't, if your rules tell you that if the market breaks above the resistance, for instance, I need to wait for support, and then if support holds, then I'll start looking for buy. Now the market breaks up resistance. The market didn't even pull back to resistance. It's coming close. You see some weak rejections and you think, oh my god, I don't want to miss out on this one, which is also the next point that I want to add here as well, which is I think which is the most important thing for the Nasdaq traders, which is FOMO, the fear of missing out. So you don't want to miss out on a good opportunity, but you need to be able to know when to step out of the market, because why, or not force a trade in the market as well. You need to be disciplined enough to say that this is how my rules work, and I'm going to stick to my rules no matter what happens. Even if I make no money for 3 or 4 days, I'm not going to force a trade or force an entry in the market. I'm going to wait for my rules to be satisfied. The next thing is FOMO. Now everybody's got this. Why? Because sometimes the market will be falling and then people see the market is at a previous level of support. Then they want to just get in here. Now they don't get in. Now they see the market pulls back slightly, and that anxiety feeling, that fear of missing out is coming in, and you see the market pulls up and the market pulls up, and you're looking at your screen going, oh my god, I can already see myself standing on that Golf 7 GTI if I take this buy now. And and the more you anticipate whether you should take it or not, the more you start painting a vivid picture in your mind of how the girls are going to run after you if you pull up with that nice GTI Golf 8, if you take this trade. And then just as you decide to take the trade, the market says, well, you're not ready for that Golf 8 yet, and you enter that buy and the market says, well, your bus is coming at 8 o'clock, and then boom, then you start losing the money. And then again you go into that mindset of thinking Forex is a scam, the markets were targeting me, the markets were just waiting for me to enter, they were just looking at my trades. Yeah, the market, do you think just because you bought now the market was like, oh look there, Johnny just bought the Nasdaq, let's all sell? No, it doesn't do that. They need more than one person to be able to buy before they can sell. So there was a lot of people like you that had FOMO, that was like, I'm gonna miss out Golf 7 ZTR. And then they were like, okay, we've got enough buyers in here, guys, time to dump the price. They dump the price and they take out all that uh, stop losses, and then they go boom, then you go, yes, this is should. And then you just go and you go fetch your bank card again, and you deposit. It's like, guys, I'm gonna buy the dip. And then the dip comes and you go, it's time to buy. And then just as you buy, then the Nasdaq says, dong dong, the next train to Bowel from Cape Town, and then you just have to go wait for the train again. So it's important that you don't have that FOMO, the fear of missing out as well. And then the last thing I do want to speak about is, having a set of rules. Now, set of rules. So having a set of rules is basically, I don't know how I spell tools. So having a set of rules. So it's very important that you've got a rule-based strategy that you use. So because why because just like the trading plan has got these list of steps that you need to follow, trading also in general, remember, trading the stock market physically has got a set of rules that you need to follow, and the psychology behind trading, there's also a set of rules that you need to follow, because there's a direct correlation between uh, uh, um, trading psychology as well as risk management. Because why, if you don't manage your risk properly, it's gonna mess up your brain. Because why, and to give you an example quickly, if you've got 100 dollars in your account, let's just call it 100 rand in your account. If let me just make it look better over here. So I want to show you guys just something quickly. Okay, so Johnny, okay, has got 100. His lot sizes is 0.01. Okay, Josh is coming in, same 100 rand. Josh like, oh Lamborghini, I'm coming for you. And Josh go, I'm gonna go 0.5. Then Mario comes, and Mario's like, oh yeah, I actually want to buy me. I just want to get that new Ferrari that Michael Schumacher had. Okay, and he goes like, I've also got 100 of that, but I need to get that Ferrari. It's almost Christmas, guys. I don't have a choice. I'm going to go in with a 0.010. So these all three guys, they just taken a buy. Okay, they've just taken a buy. Now, what happens is that the market starts the drawdown process. Johnny opens up his phone, he sees that, okay, he is down minus 10 Rand. Okay, he is down minus 10 Rand. Johnny's down minus 10 Rand. Josh opens his phone and he sees he's down minus 50 Rand. This guy opens his account over here and there's no trades running. Who do you think is going to feel the most of this? Firstly, Marty's gonna go like, yo, my bro, where's my bank card? Josh is gonna start feeling anxiety. He's gonna get panic attacks. He's gonna feel a certain type of way. Johnny's gonna go like, okay, only 10 Rand. No, it's fine. I'll probably hold it for until 20. And because Johnny was able to manage his risk properly, it doesn't affect him psychologically. So he doesn't feel anxiety or he doesn't feel a certain type of way. That's why they say you should always risk in order to trade another day. But people don't understand that because they want what they see on Instagram and Facebook. That stuff is never going to happen. And I can tell you guys now, trading in general is a long process. It takes a lot of time to become a successful trader. If you can go and study for 6-7 years to become a lawyer, I don't know what makes you think that you'll be able to become a successful trader within a couple of months. Other problem is people will join every mentorship program that they can in the world and still not be successful at trading, because it doesn't matter what skill you possess when it comes to trading. If you don't have the correct mindset and if you cannot manage your risk, then you will never ever be successful in the game of trading. And some people are going to disagree with me to say that, it's not that, which is also okay because I'm just speaking from my own experience. It's the same as having a fancy job. You can have the best job in the world, but if you don't know how to work with your money, yeah, bro, you're gonna either lose all your money or you're not gonna see the growth process at all. So that's about it, guys. That's all. If you have any questions based on what I just discussed now, you're more than happy to just let me know down in the comments below what you would like for me to cover. Uh, any questions that you'd like for me to answer. Other than that, you guys should have a safe, blessed weekend. And as always, cheers for years.